Second is sponsored by Strategic Wealth Designers.
For your money tonight, some breaking news tonight. Negotiations on that infrastructure package have collapsed in Washington. Within the hour, White House Press Secretary Jen Psaki says President Biden has closed negotiations with Republicans over the size of that infrastructure package.
Yeah, Psaki says the president will continue to discuss the package with senators from both parties. CBS 4's Nick McGill spoke with our financial expert about the potential impact of this legislation.
I'm joined today by Mike Reeves. And Mike, what industries could actually be impacted by the bill?
Well, the bill could benefit a lot of different industries. I mean, you're looking at the transportation industry, obviously, the infrastructure there, power companies, water utilities, telecommunications, as well as companies that make components that go into technology. So anything that could be considered infrastructure, they're talking about, but we'll have to wait and see exactly what comes through in this bill.
Now, then the question is, if those industries are impacted, then how have they typically performed in the stock market?
So if we go back and look at the last 10 years, various groups have done well and some have lagged. That we're talking about that might be impacted. Technology companies, logistic companies, some of the utilities have done well. However, companies that have lagged behind are the ones that make the material that'll go into this infrastructure bill, and some of the telecommunications stocks really haven't done as well as the general stock market.
All right, so let's say the bill passes then. What impacts financially could we see, and should that change our investment decisions?
Well, you're going to see certain areas of the market do very well. Okay, so companies that create that material, they should get a boost with something like that. Companies that would design the infrastructure, build the infrastructure, they should also get a boost. However, okay, if you're spending a lot of money, there could be some inflation created, as well as more demand for materials that were already in demand. And that could hurt parts of the economy. In a situation like that, you want to be careful with interest rate sensitive stocks, or especially bonds. That could hurt those guys, as well as increase interest rates over time.
All right, Mike, we appreciate the insight. You can find more financial advice from Strategic Wealth Designers on our website, cbs4indy.com.